Hello and welcome to the Crypto Jungle. My name is Baloo the Bear, and here on the channel we keep crypto simple. We look at the price in the context of volume using the Wyckoff method. If that is something that interests you, then why don't you hit the subscribe button? We stream twice a week, Monday and Friday, at the open and at the close. So in today's video, everybody's freaking out because Bitcoin is dumping. Are we in a bear market? That is the #1 question on everybody's mind. If you go to Crypto Twitter and ask that question, you will be surely met with a resounding yes, a resounding yes. But we'll take a look at the charts. We'll take a look at what we're seeing. We'll see the short term, medium term, and what I perceive in the long term. Microphone's a tad low. It's probably just not close enough to my mouth. Trying to figure out where to put all this stuff. Test. Is that any better? Anybody out there? Can you hear me? Okay. I guess it's just you. Crank the volume. All right, so we'll take a look at Bitcoin. We'll take a look at Ethereum. I want to take a look at the Nasdaq, as well as some on-chain analytics as well, to kind of show that there are some big differences into what we're seeing in this bear market versus what we saw at the end of the market cycle in the previous cycle. So without any further ado, let's go ahead and take a look at the king of all crypto, and that is Bitcoin. Taking a look at Bitcoin on the daily, we are penetrating my line in the sand here. We are now trading below my line in the sand. It can still recover from this point. We can still close above it. I need a weekly candle close above 43.2 for me to be happy. But if we start trading below it, then we need to realize that this formation could end up being kind of a double top formation, where we were going to be in a much longer term accumulation period moving forward. So there is this downward sloping line of resistance that we are unable to get above. So until we can start to break this structure, which means we do need to find support, trade sideways, and get beyond this downward sloping line of resistance. Until we can do that, we're in a downtrend, down only mode for Bitcoin. And since Bitcoin is the king, everything is in down only mode. We can quickly go ahead and take a look at the alpha numerics indicator. There are some interesting things that are beginning to present themselves, or teasing us to present. What am I even saying? Let's go over to the 3-day, turn on the alpha numerics indicator. This is a fantastic indicator for the members of the Crypto Jungle, and we are getting very, very close to flashing a green diamond on this indicator. Now, these green diamonds, for those who are using the indicator, I got a question today, hey, we got a green diamond on the daily and then it went down to lower levels. What's up with that? Pretty much what it's referring to is just the risk to reward ratio that's available when you're in a very oversold environment. Sentiment is terrible. Fear and greed is at an all-time low. Well, not all-time low, but it's at very, very low levels, extreme fear. And we are very oversold. Typically speaking, from a technical point of view, if there's overbought and oversold, you want to be selling when it's overbought. You want to be buying when it is oversold. And we're getting very close to that point where we can see this green diamond flash. So the last time we flashed a diamond here was a local bottom. It signaled the floor of Bitcoin. And we got another one back here also signaling the floor. This just so happens to be the two best times for you to buy Bitcoin in the previous cycle. So we're getting very close to flashing another one of those signals. Doesn't mean that the price can't go to lower levels. It just means that it is a statistically high probability area for you to be accumulating Bitcoin. Accumulation is the key here. So for all of those leverage traders out there, if you're shorting, best of luck to you. If you're going long, best of luck to you. We are in a very low liquid environment right now. Overall, through the market, the crypto market, as you can see right here, volume is declining. There's not a ton of trading activity right now versus later on in the year. I anticipate that as the end of January comes to a close, we're going to see that volume pick back up. Until we get that volume, until we get that institutional interest, until we get that money flowing through the order book, volatility is going to be very much so the name of the game here. So it can go up, it can go down. It's going to be very volatile in both directions, as the order books are very, very thin. We have thin order books, so you need to be careful in those types of environments. So adding any leverage to uncertainty is not probably the best idea that you could be doing. So accumulate spot assets, you know, what else are you going to do? Are you going to hide in fiat? You know that the fiat system is dying, don't you? You know that inflation is going rampant, don't you? Bitcoin is a hard asset. You want to be holding hard assets through time of inflation. So let's go ahead and take a look at a little bit of a comparison between what we're seeing in this cycle peak right here. This was the 2017 cycle peak for Bitcoin. And look at the addresses. So we had a little bit of a dump going into it, a little bit of an accumulation, and then a pump on the addresses as we got into our blow off top. Now, we don't have to have a blow off top. We can have a very different structure moving forwards. But the main theme of this is the addresses overall were in decline into this area. They were in a decline into the overbought blow off top. We're not seeing that here. We did not see it throughout this whole thing. It was just a very low consolidation range, nothing volatile in terms of the address holdings. So this is indicating that there's not a lot of the long-term investors who are selling anything. So there's still a supply shock that exists on chain. There's still a supply shock that exists on the exchanges. So we don't have that market-wide consensus that the top is in, we're going into a multi-year bear market. So yeah, when we take this is that cycle. Yeah, when we're looking here, we don't have that sell-off. We don't have that selling of all of these coins. We don't have that emptying of wallets. So this is not looking like a blow-off top to me. So let's go back over to another one that I like to take a look at. Mining is still very much so an important metric to pay attention to. And one of the better things that you can look at, if I can just find it here, go to my dashboards and let's go to the market tops and bottoms indicators. One that I really like to pay attention to as of recently is the Pull multiple. Where is the Pull multiple? Right here. Actually, the Pull multiple can be put on trading view. So why don't we do that? Let's turn off the alphanumerics indicator. Let's actually turn off all drawings. And let's pull up the Pull multiple. We'll just get rid of the RSI, historical volatility for a sec, and that pencil mark. And I want you to pay attention to this right here. I'm actually going to make it a little bit easier to see. Red, and crank it up so it's nice and visible, nice and visible. This is indicating the profitability of mining in relation to the yearly average. So typically, when miners become 6 times more profitable than the yearly average, that's signaling to the market that we're getting very overheated, it's getting irrationally exuberant, and it's time for the miners to really start selling down some of their holding positions that they've been accumulating over the years. That has not happened yet, and we have been in kind of this lower end of the range, leaving a ton of room to the upside for the profitability of mining to signal to the market. So the wallets are in accumulation. The miners are not selling. The retail is scared, and we have end of year illiquid markets. These are all telling us that A, this is not like the bear market that we saw in previous cycle, and B, there's still a ton of supply. There's still a lot of investors who are looking at this in the long term, and they're thinking the long-term vision, and they're not ready to, sell we have a diamond hand market right now is basically what I'm saying. So there's still a ton of supply that is held up in strong hands, held up in long-term investor wallets, that has not peaked its way into the macro market, which those are the indicators that would show you that you are in a bear market. So if we do have a bearish sentiment, if we do have bearish price action, if we do have a multi-month accumulation moving forwards, it's not going to be the bear market of 2018, 2019, 2020. It's not going to be a multiple year bear market. It's going to be a multiple month bear market. So Certainly not the type of devastating effects that we saw in the previous cycle where altcoins basically traded to zero. I don't see that showing up anywhere in the fundamentals. I don't see it showing up in the on-chain data. It's just not there. It's a very different thing that is occurring here. This to me is just an accumulation. It's a reaccumulation. It's a wide range, wide emotion, lots of volatility, lots of people uncertain as to what to do. But let's back it all up and just remember one thing. We still have a few days for this weekly candle close to close above my line in the sand at 43.2, currently at 42,000. So we don't have that much further to get up to close this candle at a healthy range, holding support with the potential of a reversal. So pay attention to what we are, where we're going to close this Sunday at the end of the week. Pay attention to where that is going to close, because I do anticipate if we can just consolidate on top of this support range for a few weeks, get to the end of the month. I'm thinking somewhere around maybe middle of January, the 15th, maybe the 20th of January, 25th, getting near that end as businesses kick back up, as investment propositions are presented to individuals. We may just see a reversal moving forwards here. So it's not done yet, but you do need to prepare for both sides in the event that we do end up in a much larger accumulation pattern and a much larger, more volatile accumulation. But overall, to me, this is accumulation. This is a Wyckoff reaccumulation. I'm not worried. It's just, you got to hold through the volatility sometimes. Trading is not always about selling to get these little movements out. It's not always about being really active with the account. Sometimes the best thing to do is hold. That's the approach that I'm taking with the market moving forward. So that is Bitcoin. Would love to hear my TA on time. So time, we'll take a look at time. But let's quickly look at the Nasdaq before we get into that. Time is kind of an interesting thing, and I have my own opinions, and I'm going to try and refrain from being too brutal with my opinions on time. But yeah, with the Nasdaq, you know, we had a reaction. Markets still have a ton of fear. Global markets have a ton of fear. We're very correlated to the Nasdaq in one direction. When the Nasdaq dumps, we dump. When the Nasdaq pumps, we do fuck all. So we do need to pay attention to this, but we are sitting on a support range inside of this long-term channel that we've been inside of the Nasdaq. If we do begin to break below that, then it's not going to be looking good for the crypto markets, because this chart going down equals crypto going down, because it is correlated. The Nasdaq is the tech sector of the equities markets, but we are seeing a little bit of a bullish divergence occurring here on support at a bottom of the channel. We'll have to see if we open next week and get a rally back up to the top of the channel. So not looking too terrible here. So let's go ahead and take a look at time. These DAOs are very hard to chart. So you need to take that into consideration, that they are not the easiest. All of the DAOs have a ton of selling pressure built into the code, okay? It's minting and minting and minting. Minting is the same as selling. You're applying a ton of selling pressure. A fantastic example of seeing what over minting can do is the price of SLP. For those who have been paying attention to the Axie Infinity ecosystem, it is in down only. So there's a ton of selling pressure when you have algorithmically adjusted supplies that are constantly favoring the minting side. These are highly inflationary assets. Olympus DAO, Time, Hector DAO, you name the DAO, it's highly inflationary. That's how they are doing their token distribution models. I will say that with Olympus just lowered their APY, which a lot of people are very worried about. I think it is one of the best things that we can have, and I'm pretty excited for Olympus moving forward, as it's one of the most important projects I see in all of the Ethereum network and other chains as well. But let's go ahead and take a look at Time Wonderland. How do I even pull it up? Maybe MIM. Yeah, so the TA on Time, basically, if you have a support, it'll break. That's basically how it works as far as the TA with any of these DAOs with highly inflationary supplies. I'm gonna have to just pull up. Let's just go to CoinGecko. And let's go to Wonderland. And we'll just look at the chart on here. So it's in down only until we get a reversal here. It is further downside. The supply side of this will continue to be very, very high. If you go to the time Wonderland, if you go to wonderland.money and take a look at the, let's enter the app here. Take a look at the APY. It's deceiving. So 67,000% annual percentage yield. That is the yield that you will receive in time tokens. This is not really a fair word to be using to investors that don't really understand what's going on here, because the annual percentage yield is also the inflation rate. So imagine if you know, the US government inflated their currency by 67,000% per year. Would you think that that's a good investment? No, it's a terrible investment. The inflation rate of these DAOs is extremely high, but they do it for a very simple reason, and it has to do with token distribution. You can't pre-mine, you can't have VCs, you can't do any of that shit. If you just launch a token with a very high APY, the people that get in early are the ones that are going to have large amounts of the token at distribution. The time is backed by one DAI. If it's an Olympus fork, it's backed by one DAI. Let's actually pull up Olympus DAO. Okay, each ohm, actually I'll just pull it up here. We'll go to ohm. Ohm is sitting at a price of 268%. And do you know what backs it? $1. So for every Olympus token that you have, it's backed by $1. And you will receive that token distribution over the runway. So these are very complex projects to understand. I'm incredibly bullish on these projects. I think that they're one of the most important and amazing products in organizing liquidity in DeFi, period. But if you don't understand what's going on, you need to realize some very key and fundamental things. And that's the reality that these don't have any buoyancy until it hits $1. When it hits $1, they will be burning. When it burns, it'll prop it up to $1. The intent of Olympus and other products is to be a stable coin, and that stable coin can be pegged to $1 if it's going to be around a DAI. I don't think that we will ever see time at $1. I don't think that we will ever see Olympus at $1. I think that it will be backed by its treasury, and as the treasury builds, we'll see its free floating value to be somewhat. There will be a market consensus on what's going on. But as far as the TA, ton of downward pressure. If you're trying to find entries into these based on technical analysis, I would advise that you don't. These are projects that you dollar cost average into. These are projects that you hodl for multiple years. That's how you approach these DAOs. It's not a coin to trade, because on the way up, they don't make very much money. And on the way down, they will retrace obscene amounts of money. Obscene amounts of money. These are dollar cost average coins. There's no other way about it. Olympus is on its 80% retracement. It did an 80% retracement as of now, still heading to the downside. It did another 66% retracement here, and it's done a 88% retracement here. So these things are volatile. They're not really, if you want to try and trade them, go for it, but you need to wait for this turnaround. You need to wait for the structure to get back up before you would want to be buying in if you were coming at this from the point of view of a trader. These are investments. These are long-term investments. All right, let's catch up with the chat a little bit. When NFT giveaway? Probably never. Does the volume include derivatives, or is it only spot? The volume will only be spot. Derivatives is another thing. You're looking at the volume of contracts. Every volume signature that's on, if you're looking at an FTX chart, you're gonna have different volume on all the different charts. So if I go to FTX, let's Let's go to BTC perp on FTX, and then I go to BTC 12. Let's go with the futures. FTX. The Q1 contracts, you're going to have very different signatures, right? So here we've got a high volume signature on FTX on the Q1 contract, and here you don't have the same signature. So the derivatives are something completely different. You're not actually trading Bitcoin at all. You're trading contracts. You're trading pieces of paper that are IOUs for Bitcoin with you and the exchange, or you and the other party. So no, there's the index chart will only show you the spot volume. Gravy, are you in the Jungle Discord? Gravy is, absolutely. Greatest of all time, Bitcoin, new BitTorrent, new BTT, BTTC, Web3. You're for sure getting muted. Hide user from channel. I don't know if that's a shill or what. Forever Young, hope everyone is feeling well. I'm feeling great. Trader Joe, mim time. Okay, that's good to know. I should pay attention to the chat a little bit more. Let's throw that in, take a look at time. No clicky. Oh, because it's on FTX. All right, well, it's not working. Any thoughts on IOTA? I think, we're kind of over the chains, the alternative chains. Like, this is ugly. What is this? Is this IOTA? Okay. Okay, that's actually not as bad as whatever the hell I was looking at before. Everything is in reaccumulation. Nothing is trending. Nothing's breaking out. So with IOTA, keep it simple. If you're looking for a long entry, you have to break above the resistance. Until we can get above the resistance, nothing to do. It looks like we're squeezing, we're getting to a resolve. Doesn't mean it can't break down. Do not draw support lines. Don't do something like this like a lot of pattern traders do, because you'll be sadly disappointed. Just wait for the break. Wait for the break above this resistance. If Bitcoin begins to trend to the upside, it's going to be looking really good. But I think the fundamentals of IOTA are quite weak. I don't think there's anything built on IOTA. Let's just take a quick little gander. IOTA.org. Get started, solutions, develop. So, oh, they have something. No, they don't. They haven't built anything. IOTA's been around far too long to have not had anything built, and because they've built nothing, I'm going to conclude that they're never going to build anything. So for me, it's a hard pass. I'm not interested in putting any funds into IOTA. It might be a cool idea and it might work great as a currency, but the problem is nobody's using it, nobody's building on it. So it's been around way too long to not have developer interest. So no developer interest, no investor interest. They announced they will be changing time to wrapped memo, similar to what's going on with Olympus. All of these forks, in my opinion, now, to get back to my opinion on Olympus DAO forks, Olympus DAO is the best fucking development team I've ever seen in my life. If you're not in that Discord, if you're not watching the speed at which this team develops products and, develops code, they're the best. They're the best. I've never seen anything like it. It's all about Olympus for me. I could care less about time. I could care less about any of these Olympus forks. Olympus had a great idea worthy of countless forks. And when you have that many forks, you're on to the right path. You can copy and paste code. It's very easy. Control C, Control V. but you cannot copy and paste talent. Olympus DAO is where the talent is. Time has some talented developers, don't get me wrong. They have the leader, the lead dev of Abracadabra. I'm not saying that they're not a talented team. I just think that in the long run, the long-term vision and the products that are being offered by Olympus are much better than the products and development that is being offered by Time Wonderland or any other DAO, period. You know, Olympus Pro with their bond as a service program. They're going to have bond zaps. They have all these apps. They've got so many good products. They just launched their Olympus Pool Party on what site is that? The Olympus Pool Party on Rari.capital. All they do is develop. They move so fast. What about Quick, Maddox, Dext? So you have to be careful. I don't know a ton about QuickSwap, but we'll take a look at the technicals. You know, speculative demand is one thing. Speculative demand can actually take you quite far. But you need to understand, you know, there's a ton of emissions on these. So people providing liquidity get these coins for free. What do a lot of people that get coins for free do? They sell them. So there's a ton of selling pressure built into this one. It looks like there was a big pump that was quite rightly rejected and sent right back to where it needs to be. It's in down only mode, and I really think that a lot of these are not going to be able to outperform Ethereum. So let's take a look at Quick ETH, or I guess maybe Quick Matic. Long story short, the emissions are too high. So with a lot of these governance tokens, not a ton of people using QuickSwap, in my opinion. I don't know if you use QuickSwap, but I think SushiSwap is a better user experience. SushiSwap, anything I want to do with a DEX, I do it with SushiSwap. QuickSwap, it's just, you don't need to go through all those hoops to trade on Matic. You just hook your website or hook your MetaMask up to SushiSwap, and you can use any chain. There's so many different chains that you can use on SushiSwap. So I much prefer Sushi, and then with Sushi as well, you can do Sushi staking to get X Sushi and X Sushi. Oh my God, I'm getting tongue-tied weird here. X Sushi is that derivative, that yield-bearing asset. So I'm not sure if Quick has that. If they do, that's a good thing. If they don't, this is down only. Down only. And as far as the technicals, until we can break structure, which it's not looking like it's going to do, you know, you need to get above. You need to get above $431 before you can even start entertaining a reversal. As it stands right now, down only, man, down only. What do I think of ISO 2022 coins in general? ISO. I don't know. I don't know what ISO is. So it's hard for me to have an opinion on something that I don't know. ISO, you're gonna have to break down that acronym for me, friend. What do I think about farm? Same shit, different smell. Farm. There's nothing trending here. It's not doing anything. What does farm do? And here's the thing, you know, we only need 10 cryptocurrencies, period. End of story. Like, cryptocurrency, these are not stocks. These are not stocks. These are not companies. These are functions and protocols for an internet security layer, an internet of value transfer, a world of Web3. You do not need, how many coins are we at? 12,000? You do not need 12,000 coins, you need 12. There will be winners, there will be losers, there will be ecosystems, there will be fights within those ecosystems, and one will rise to the surface, but at its core, what this is it's a value transfer system. It's a security layer of the internet. You only need a certain amount of coins. Some of them offer incentive, some of them offer governance, some of them are the gas, and some of them are the store of value. but we don't need all these fucking coins. Harvest Finance, market cap under $1 billion, 24-hour trading volume actually quite high at around 106 million. Let's take a look at what it's doing in the price. Trading sideways, doing a whole lot of nothing. A little bit of a recovery, a possible trend change here. So if it gets above $300, then we could talk about a trend reversal. But as it stands, you know, this is another one that's just given for free. If something's given to you for free, how much is it worth? It's worth nothing. You were given it for free. ISO 2022 is an ISO standard for electronic data interchange between financial institutions, XRP, XLM, algo, etc. I don't have any interest in centralized controlled things. Sorry. Pretty sure I lost a subscriber there. It is what it is. Yeah, I don't give a fuck about XRP. Don't give a fuck about XLM. I think they're shit. I don't give a fuck about banks. We don't need banks. Newsflash, the banks don't need to be here. It's old technology. You don't need banks. We've created every single application that a bank does autonomously, lines of code, secured by its contributors, and that's it. So I don't give a fuck about the banks. I don't give a fuck about any of that shit. Any way to buy Ohm without paying gas fees or less fees? Yeah, you can buy G-Ohm on Avalanche, or you can buy G-Ohm on Matic, or you can buy G-Ohm on Arbitrum. You can purchase it there. Rome DAO was endorsed by the Ohm creator, I believe. Sure, but what are they trying to do? Because if they're trying to be a reserve currency for DeFi, that's what Olympus is trying to do. So be careful out there. Getting quite negative. I don't mean to be this negative. I'm just trying to share my theories. I'm just trying to share my views. You know, at the end of the day, I'm not an economist. I'm not a blockchain developer. I'm a guy who's been in cryptocurrencies since 2016. That's about it. I've seen projects come and go. I look at use case, I look at usability, I look at user experience, and I look at the product that's being developed. And all this is the internet. That's what it is. We are taking the internet to the next stage, the next generation of the internet, the next part of the internet, which is Web3. Web3, you'll have one user ID and you'll be able to log in anywhere. You'll be able to log into any bank account, whether it's a checking account, savings account, anything you want to do. It's going to all happen with your identity. You will be one person. You won't have scammers replicating individuals. You won't have all of these security flaws that are existent in Web 2. It's going to really kind of simplify the internet and make it a much safer place. And we don't need a ton of stuff to do that. We just need good quality development on a few key protocols to make that happen. And that's what's happening. Is Gala just getting started, or do you think the play to earn sector will be too saturated? I think play to earn overall is actually quite saturated. There's a lot of money out there. There's a lot of capital. There's a lot of investment in products that don't exist. And so that's a problem. That is characteristics of a bubble. I think we're getting to the end of the mania phase for the metaverse. You know, the metaverse ain't here. It's not going to be here for a while. So these play to earn things, it's getting very saturated. And that being said, I'm actually pretty bullish on Axie Infinity again. I think that Axies are finally at a level where people are going to be interested in developing scholarships. They're going to be interested in buying teams. They're going to be interested in positioning themselves for the next kind of development of Axie Infinity. So if anything's going to be a winner in my eyes, and this hasn't really changed over the year and months, it's going to be Axie Infinity. So if Axie Infinity sees success, we're going to see the whole cycle start back over again. So watch for that, because I think metaverse, gaming tokens, play to earn, it's all really overvalued right now. But if we get another move, in Bitcoin, we get another move in Ethereum, we get another move in the crypto market, and Axie Infinity gets another leg up, we can see the whole cycle start back over again. So we can actually talk a little bit about cycles and how maybe moving forwards, like everybody's kind of familiar with the 4-year cycle theory. Let's actually just move this out. You know, everybody's familiar with the 4-year cycle. What if we move to a 2-year cycle? 1 year up, 1 year sideways, 1 year up, 1 year sideways. You know, if you look at this chart, there isn't a fucking bear market. There's no bear market. It never happened. It never existed. So, you know, when you zoom out far enough, there has never been a bear market in Bitcoin. It's been up only forever. So, you know, these rallies and these reactions can probably continue, and they might just get shorter and shorter in extension and shorter in time duration as well. So we could just be poised for we could be on a pause before we get another extension. We've pretty much had a year of sideways. So if that is the case, we can see less volatile crypto market overall, where we see these high quality projects that are adding value to the world see price appreciation, even in the context of Bitcoin being in a bear market. So we'll have to wait and see what happens with that. But yeah, you know, there's a lot of theories that are being broken. There's a lot of models being broken out there. So when models break, you need to come up with new theories. You need to come up with new strategies as to why that model broke and what we can expect moving forwards. Yeah, we got asked about Gala. Let's take a look at Gala. We'll take a look at the TA on Gala. First of all, you don't need Gala. Gala is a great marketplace. Fantastic. It's a really good marketplace. But you know what you can bring to that marketplace to buy NFTs with? You can bring Ether to that marketplace and you can buy NFTs. So do I think it's just getting started? No, I think it's very overheated. And I think we're going to begin to trend back down right to where we went, because at the end of the day, you do not need Gala tokens. Gala is being given for free to those who are operating nodes. So to anybody who got a Gala node, by the way, back here, I know some of the individuals at Hard Forking have some Gala nodes. Kudos. Well done. Fantastic, because you guys have a ton of ability to sell up in this range. Gala as an investment, I just don't see it. NFTs, sure. You could purchase some NFTs for some of the more popular games and see if you can make some trades there, trading some, you know, spider tanks or trading whatever game is popular there on Gala. But Gala, the currency, I don't see it. It's all about ETH. ETH is the currency. So people want to sell their NFTs for ETH. They don't want to sell their NFTs for Gala. No loss of subscriber, brother. Well, I appreciate that. I can get a little opinionated, but you know, keep in mind, these are opinions. Just a guy on the internet. I have my opinions. You have your own investment thesis. I would actually like, if you're in the Discord, point me in the direction of that material, because I'm interested in your comment here saying that politics has to tie into the crypto space somehow, is what I was thinking. So I want to know exactly what you mean by that statement. And if you're not in the Discord, join the Discord. We have a free side. Just throw that content in so that we can have a more educated discussion, because when I'm on a live stream, I don't have a ton of time to do research and react to things that I don't know about. So I give a surface level assessment. And that surface level assessment is, me personally, I don't think XRP is going to be the global currency. But if there's something that I'm missing in terms of politics that will, you know, legitimize cryptocurrency and bring it into regulatory compliance, for lack of a better term, then please, I want you to please educate me on that, because I don't see the need, but you know, we do have to strike a balance somewhere in the middle. One inch dying? Probably. I hate 1 inch. I can't just type it. Yeah, these DEX tokens, man, like I'm really bullish on sushi, and I have a big position in sushi. And it has not been a good trade. It has not been a good trade. You know, you have your winners, you have your losers, that's for sure. We all have portfolios that have winners and losers. Sushi has been a loser. Uniswap is a loser. 1 inch sitting on support. It's actually not that bad where we're sitting. If we break below this level, it's not going to be looking good for 1 inch. We have the similar structure on Sushi. Let's take a look at Sushi real quick. Same sort of thing, except more of a down structure on Sushi. We just made a lower low with Sushi, where we have this much more pronounced downtrend on Sushi. We'll take a look at Uni as well. So this is like the three main DEX offerings out there. Uni and 1 inch seem to be a little bit more correlated in structure. Uni is actually kind of regaining, we could actually see a bounce here in Uniswap. So that's kind of interesting. This is one of the better charts out here as far as a recovery. If this level can hold, if this level right here can actually hold, that's actually not looking bad. That's kind of a spring type action, and we could begin to break some of these moving averages and hit some of those key levels to get us out of this reaccumulation. But yeah, 1 inch, Sushi, Uni, they're all the same. They're not spectacular. Kahuna, the class is not on regular schedule. I pushed everything forwards. So that's just for this week, having some scheduling adjustments. So we will push it forwards. If you're not going to be around at the school, we do the recording as always. Baloo the Bear, have any thoughts on Cypher? No, I don't. I haven't looked at it, two bags. Haven't looked into it. Had some good runs with the DEX tokens, then we had some good runs with the gaming tokens. What do you think might be the next genre? I think we're just, it's really hard to predict those super hypey trends, but one trend that is consistently delivering is the smart contract platforms. So, I'm looking at Phantom, I'm looking at Avalanche, I'm looking at Telus Network, not Telus, which one is it? Yeah, Telus Network. I think this one's gonna grind down quite a bit into the value zone here. Yeah, I'm looking for those layer twos, or not layer twos, those side chains that are making the Ethereum experience very cheap, but Ethereum compatible. I feel that moving forwards, we really need to stick to the ones that are going to be EVM compatible, because liquidity is DeFi. DeFi is liquidity. If we can't easily move, like if we're going to have, big whales on Ethereum just get tired of gas fees and move over to Avalanche, I don't anticipate that they're going to live on Avalanche forever. I think that they're going to trade actively on those side chains because it's cheaper and more cost effective. But when we have ETH 2.0 and we have sharding and ZK rollups and we get all of the scaling solutions figured out and ETH becomes cheap again, we need to be able to migrate back over. So because liquidity is the lifeblood of DeFi, it needs to be easy. The bridges need to be accessible, which is why I'm kind of bearish on projects like Solana, where it's not as easy. I've been critically bearish on Cardano. Any of these silo blockchains where they're not just there's no bridge over from Ethereum, I'm pretty bearish on. But yeah, I think a safe bet moving forwards would be some of these side chains. Atom is getting a lot of attention. Near is getting a lot of attention. So those are the ones to look out for, the Ethereum compatible side chains. Sell everything. Where's the pin for the Discord? You are on YouTube. There should be one in the YouTube description. Maybe there isn't. Maybe there is not. So let's just give it to you. There it is. And if you're on Twitch, it should be in the About Me section, but there you go. Web3 or privacy next? I think both. Web3 is revolutionary in ease of use for internet applications. Really, really important stuff. Privacy, security is also really important. I think Bitcoin is Bitcoin is still going to have its place, and we're going to start to see more of these private trading applications built with the Bitcoin network. That hasn't happened yet. Bitcoin is a very slow moving machine. Bitcoin is the tractor of crypto. Nothing happens very quickly with Bitcoin, but when it happens, it's usually incredibly secure. Yeah. Metis and Near getting some love for sure. Yeah, Metis. I was watching Metis, and I turned away and stopped watching Metis, and then when I turned back, it had pumped a ridiculous amount, and I missed it. So I'm a little upset. About Metis, because that one was on my watch list. I took my eyes off of it for 1 second, and it got away from me. Should have set an alarm. Coulda, shoulda, woulda. Didn't, unfortunately. Is what it is sometimes. So we're gonna have to wait for this one to consolidate, get a better signal. The risk to reward, it's just way too risky to make an entry right here. But I need to do some more fundamental research on why Metis is such an important project, because they do make some claims that I don't fully understand. Most notably is the Ethereum, they're not Ethereum compatible, they are Ethereum equivalent, and I don't know what that means. I don't know what that term means. So if any of you know what Ethereum equivalency means on a side chain, please let me know in the comments below, or give me a link or some sort of resource that I can better understand what that means, because it's obviously an important thing that it has a lot of people excited. Yeah, Metis is a layer 2. Yeah. What about layer 0, Cosmos, and a new layer 0? I don't know what layer 0 means. What does layer 0 mean? Isn't layer 0 the internet? Like, I don't know what that term means. So there's a lot of buzzwords out there, and it's important for you to do your research to understand what these buzzwords mean, because they can be very beneficial for your ability to make smart investments in crypto. I don't know what layer 0 means. Layer 1 is Ethereum. What's below Ethereum? The internet. Mining equipment. I don't know what layer 0 is. But I will say that Cosmos, Atom, is one that I'm looking at that is really poised for some nice bullish price appreciation. I actually think it had a pretty good rally recently, so it might be going into a consolidation. Let's just pull it up and see. Nope, don't want that. Coinbase, I guess. Okay, so it's actually coming up into a resistance point right now. So this is a macro resistance. It's going to probably pivot low at this point. So I'd be looking to scoop it up around $20. Right now it's about 40. We need to see that 50% retracement. Now, if we can get above and stay above, well, now we got a different setup. But right now we're under resistance. You don't buy under resistance. You can see the amount of selling pressure in this area. You can see the volume spike. We have a lot of pressure pushing us down. So I don't anticipate that we will be able to get above this support, this resistance level. But in the event that we do get above it, now you have a trade setup. We don't have a trade setup right now, so there's nothing to get in. There's nothing to get interested in. There's nothing enticing about that setup currently. So, but I think that this is another one. You know, these smart contract protocol layers are really important to watch out for. Cosmos is doing atomic swaps, which is very exciting because that allows you to be chain agnostic. It allows you to make swaps from many different chains. Another one to really kind of dive into the fundamentals on. Trade set fundamentals are strong. Trade setup, there isn't one. One more fundamental token I'm hearing about is Saito, which has done well through this week. I just think layer 0 is something that works across chains, right? Oh, okay. All right. So layer 0, if that's what they're talking about. Okay, that makes sense. Something that is able to work cross chain. If that's what they want to call it, cool. I feel like a lot of the infrastructure that allows us to trade across chain happens on the layers built on top of other layers, but I could be wrong. Like I said, I'm not a developer. But yeah. Okay, we'll take a look at OGN. Don't even know what it is. And then we're going to cut it out there. OGN. OGN. Don't even know what it is. Not even going to bother looking at it. End of the stream. Lack of fundamentals. So until we can head to the upside, I mean, if you really want to call this a support, you're at a buy. You're at a buy zone. But we're in a non-trending environment. It launched, it dumped, it's trading sideways. You know what? Now I gotta see what it is. What is OGN? Origin Protocol. Heard of Origin Protocol. It's definitely been around a while. Sell NFTs on your own terms. NFTs are cool. But again, everything DeFi has to do with liquidity. It has to do with where people are. It has to do with which, like the biggest DeFi application or the biggest application for NFTs is what? OpenSea and Rarible. That's where people go. If you have an NFT, sell it there because you're going to have the most eyes looking at it. It's very hard to break past those network effects. So what is Origin Protocol doing that is different, that is going to lure over NFT buyers and sellers? And then what does their token do? Like, what does their token do? Like, let's take a look at OpenSea's token. If the token has no utility, it's worth nothing. I think Rari has a, I don't even know, Rarible. It's just consolidating and down. It's not doing anything exciting. It had some hype in the NFT boom, and now it's doing nothing. And it's because it doesn't do anything. There's no utility outside of governance. Governance is important, don't get me wrong, but governance more often than not is rewarded to the people who are using the protocol. So, and it's a way for you to have a vote in how the protocol is run. It shouldn't really be much of an investment unless there's money on the line. If there's money on the line, like what does a Rari vote do for you selling an NFT? Nothing. It doesn't do anything. Now, what does a Curve vote do for incentivizing liquidity to protocols? It does a lot. It does a ton. If you have Curve DAO tokens and you are a protocol like Olympus or Abracadabra, and you have a pool on Curve, you want to make sure that that pool gets a ton of incentives. You want to make sure that a ton of Curve goes to that pool. And how do you get to do that? You get to do that by voting with VE Curve. So having that large stake of VE Curve will give you that ability. But what advantages are there with an NFT marketplace? There's no pools where you can get a yield or anything like that. It's just a place where people buy and sell NFTs. So what's the currency of a place where people buy and sell NFTs? ETH. It's not Rari, it's ETH. It's not Gala, it's ETH. It's not AXS, it's ETH. NFTs are ETH. Or Solana if you're, playing around with the Solana NFTs. Okay. All right, we got a nice comment here from Just Tree Hugger. I can recall it was mainly for B2B. There would not be anything different in the front end, but it would allow customers to trade in any coin for any coin with the companies that use layer 0. Where they would have liquidity pools between each other for each of these coins, and the magic happens there, I think. Well, that is what I recall. Okay, cool. Yeah, we'll check out that podcast, In the Jungle. Get in the jungle if you're not in the jungle. Do you think CRO is aiming to be like BNB? It's possible. That would be a lot more utility for the CRO token, because right now the only purpose for buying the CRO token is to get a crypto.com card. That's really the only reason you need it. It's kind of like FTT. You get the benefits of the website by staking. But yeah, it would be a good move for them to do that. We all love the Ponzi. Yes, I would agree that a lot of these DAOs have a Ponzi-like structure, except Ponzi's come to an end. Ponzi's don't have Ponzi's come to an end and they all fall apart at the end. DAOs don't. Even though they look like Ponzi's, they have that kind of tokenomic structure that relies on the participation of new people coming in. What they're doing in the wake of greed is building a treasury, and that treasury is what allows it to be sustainable. So very volatile. I mean, do your own research. These are very interesting and complex protocols to really truly understand, but I can sum it up for you very simply. If you take my word for it, these are long-term investments. It's why it's called time. Time Wonderland. Why do you think it's called time? Because it takes time for your investment to actually come to fruition. Same with Olympus, same with Hector, same with any of these things. Time is how you make those things work. The effects of compounding interest is how those work. Yeah, they definitely, when I first saw it, I was like, scam, no doubt in my mind. Like, all I do is look at scam projects and just, you know, figure out ways to debunk them. And I looked at Olympus. It was clearly a scam in my eyes. And then I kept digging deeper and digging deeper. And then I came to the realization that this is actually my favorite fucking coin. Olympus is my favorite coin. Bitcoin, Ethereum, Olympus DAO. I have a huge allocation in Olympus. Will it work? I don't know, but that's investing. There's always risks. All right, that is all the time I have for today. If you guys enjoyed this content, please leave it a like. Don't forget to subscribe. If there is any value that you can bring to the community, feel free to leave it in the comments section, but better yet, go ahead and join the Discord. We would love to see you in there. And yeah, trade safe. It is a jungle out there. Peace.